Good morning, legends. What's going on, guys? What is going on today? A little bit of a correction here on Bitcoin. Got some people shaking in their booties, huh? A little bit of a correction. Not too bad. Not too bad. Guys, listen. Look, we corrected yesterday all the way to the same area we are now, and then all the way back up again. Very bullish candle, guys. Very bullish candle when you see that much buying pressure. I wouldn't be shocked to see the same thing happen on today's candle. See us get this candle bought right back up again as the day progresses. I think we'll continue to close above 91.5. So yeah. Healthy correction, guys. After what? 1, 2, 3, 4, 5 big green daily candles in a row. You got to expect a little bit of a correction, but it's nothing to be worried about, guys. I did a little bit of DCAing this morning. I put my buy alerts over in the Patreon, so check out the buy and sell chat for my buy alerts this morning. All right, let's get into the chat. Restful Mind, Mewtwo, where you been, my friend? Good to see you, brother. Good to see you. Eddie dropping that chatter. He says, "Good morning, boss. Really appreciate all your efforts." Hey, no problem, brother. I love this community. I love you guys. I love being a part of it, man. Absolutely. You guys are what brings the magic. Let's get into it here. Let's get into the chat. I had Gary Daly, morning fam. Hit those likes. Yes, absolutely. Smash the likes, guys. Blessings, John. Good to see you. John says smash the likes as well. Overcome in the house. Lions Den. What's happening, man? Thanks for all you do, big bro. Hey, no problem, brother. I got your back always. Carl, salute. Rob and chat. Hit the like button. Yes, absolutely. Miller Mountain says, doubled my Miria bag last night before the pump. Nice. That's a win right there, brother. That's a win right there. Overcome, man. Tempted to take some profits on Miria. Move with the whole higher time frame. Red money flow still on Bitcoin. Yeah, you know what, man? Nobody ever went broke doing it. Nobody ever went broke doing that, right? VTT, what's going on, man? Thanks, Rob, for all you do. If you're watching and not part of the Patreon, you are missing out. Jasmine for life. Absolutely, brother. Amen to that. Guys, make sure you hit the like and subscribe on the way in. It's absolutely free. What do we have? 82 people watching. We have 28 likes, guys. Come on. Let's get those likes up. It's free to do. Cost you nothing. Living and keep learning. What's going on, man? Good morning. Let's go, Miria. Hell yeah. Restful Mind in the house. It's a me, Mario. Good morning, Crypto Future and family. Leo, what's happening, buddy? Good to see you, my guy. Good to see you. Masked Man in the house. Definitely feels different in the air. Bless all of you. Absolutely, man. The toxic people have left the building. They realized no one cares what they think. Hit Gary Daly. Been waiting for the soap to be dropped on Bitcoin this week by the institutions. Danny, good afternoon, my friend. Good morning. It's morning here. Listening in the background when I get busy. Holiday season. Hell yeah. Hey, absolutely, man. Absolutely. Make that cheddar. Law says, what's up, man? I like it better when you call us pencil necks. Hey, no problem, pencil neck. I got you back, brother. Jamie, what's going on, man? Good to see you. Richie Rich, my guy. Come on, alt season. Let's go, baby. Roll those dice. We are caught up in the chat. What do we get up to? 87 people watching. Did we get the likes up a little bit? 37. Not bad, guys, but we can do better. All right, so Bitcoin, yeah, a little bit of consolidation here, guys. Not a big surprise. I told you guys, don't be shocked to find a little bit of a bull pennant here form, right? Don't be surprised to see something like that before continuation to the upside, right? People got to take profits who bought big at the lower levels. And they have every right to, as people who were not scared to buy at the lower levels, right? That's what courage and intelligence in the market gets you. Profits. Chat. You got me all in on ZBEC Q1 2025. My patience has become stronger. All season will benefit those who are open-minded, disciplined, think you're up. Hey, no problem, brother. David, what's happening, man? Bought a load of Midnight. Where do you see it going? Big picture, I think you could see $1 plus for Midnight. Don't ask me when, though. You think Swift Coin will back to 3 or 4 cents before we go back to the 200-day moving average? I think it's possible. It's possible. What's up, big dog? Nicholas in the house. What's happening, my guy? Good to see you, brother. So yeah, a little bit of consolidation here, guys, before the next leg up. Let's go see what's going on in the news today across the space, shall we? Let's get into a piece first. I'm feeling spicy today, guys. I'm feeling spicy. Let's go. 2026 elections could stall major crypto legislation. Investment bank warns. Senate Democrats may withhold support ahead of the election. Let's talk about it, guys. Let's talk about it. A closely watched effort to create a unified regulatory framework for digital assets in the United States could lose momentum as the 2026 midterm elections approach, according to a new warning from investment bank TD Cowen. In a note published Monday, the bank's Washington Research Group said the sweeping crypto market structure bill currently moving through Congress faces growing political risk as lawmakers begin positioning for the next election cycle. The legislation, known as the Clarity Act, after passing the House in July and referred to the Senate as the Responsible Financial Innovation Act, is now seen as more likely to clear Congress in 2027 rather than this year. Full implementation could be pushed out as far as 2029. TD Cowen analysts said Senate Democrats may hesitate to back the bill ahead of the elections that could reshape control of Congress, which currently tilts Republican. With outcomes uncertain, lawmakers could opt to delay key decisions until after the midterms, when the balance of power may be clearer. So basically, guys, what they're saying here is Democrats may hold the entire industry hostage to try to win some seats, right? That in itself tells you they do not care about the average retail investor. They do not care about the people that they are there to represent. They care about themselves. We will hold your portfolios hostage until we win some seats. Absolutely pitiful. Pitiful with a capital P. Election outcomes are always uncertain, which is why Democrats may cut a deal, the bank said, adding that political timing rather than policy substance could ultimately determine the bill's fate. A bipartisan draft released by the Senate Agriculture Committee in November attempted to address one of the most contentious issues, conflicts of interest. The proposal includes safeguards that would bar senior government officials, including Donald Trump and members of his family, from holding cryptocurrencies or playing a direct role. So here's the thing, for me, that's fine. If you want to include amendments that prevent the president and his family from being invested in crypto, that's fine. But what I will say is this: Congress, you too must be barred from holding crypto. Then all Elizabeth Warren, Maxine Waters, all the all of the congressmen and women. If the president's going to be banned from holding crypto, so should you, right? Look how much insider trading we've seen from Congress when it comes to stocks, right? So they need to be barred from doing the same thing in crypto, in my opinion. But what do I know? I'm just a pretty face, right? Ditto, what's happening, man? Appreciate the alpha as always. Hey, no problem, brother. I got the fries that'll cross your eyes. Miko, if Ripple bought Zebek, what would the price of Zebek be worth? I don't know. To be honest with you, that would be. I don't know if Zebek would sell their company to Ripple. To be honest with you, they got too much potential upside. Danny, good morning, brother. Carl, whoa. Clever says, hey, Rob, hope all is well, brother. Do you think Miria could hit 2025 or maybe even half a cent? Yes, of course I do. When? I don't know. We'll see. Rockhouse, what's up, Ken? Good to see you, man. Hello, everyone. Strange times in the cryptoverse and the macro. Big JJ, I know you changed your name to Swiftcoin and you've been very rude in the comment section of videos, so I'm just going to ignore you, okay? Ty, what's going on, brother? Good to see you. Miko says, thank you for the response. Hey, no problem, man. I try to make sure everybody gets a response. Everybody matters in this community, my friends. Elizabeth, how you doing? Long time no see. Elizabeth's been with me since the beginning. Absolutely super fantastic. All right, let's keep it rolling. U.S. intervention in Venezuela affects market dynamics. Is alt season late? I think so, my friend. I think so. Absolutely. Let's get into this, though. The U.S. Treasury market showed limited reaction on January 7th as a U.S. intervention in Venezuela as traders focused on upcoming U.S. Employment data releases due on Friday. Market attention remains on U.S. employment and trade policies, with potential implications for bond yields and investor confidence ahead of the anticipated Federal Reserve rate adjustment in 2026. Financial markets reacted to these developments with heightened activity. Venezuela's bonds rallied, expecting debt restructuring under new leadership. In contrast, U.S. Treasury yields hit a 9-month high, suggesting expectations of Fed rate cuts in 2026 due to broader economic shifts. Key financial voices such as David Adams and Morgan Stanley noted low investor confidence on the U.S. dollar, while Simon Weaver highlighted significant uncertainty yet averted disorderly conflict risks. Oil prices recovered slightly, reflecting geopolitical uncertainty and potential USD weakness. Did you know U.S. intervention in Venezuela avoids past protracted conflicts resembling swift Israel and Iran 2025 resolution affecting oil trends? Historical market reactions to geopolitical shifts often mirror current trends, such as oil price recovery amid conflict. As observed, U.S. intervention in Venezuela has made market participants reassess financial strategies, influencing bond and equity valuations. Expert opinion suggests evolving strategies, blah, 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 blah. So, there wasn't too much of market effect on the whole Venezuela situation. Let's move along here, though. Got a little clippy clip for you here from Pyth Network, guys. A little bit of a Pyth update. You know I love my Pyth. One of the bigger projects, I believe, going into 2026, 2027. Scale starts with pure market data.
Well, how do we bring real-time prices to blockchain markets so applications and developers and entrepreneurs can actually grow their companies and power their businesses with data? Because without real-time accurate data, you don't have any business, because no one's going to trade on an exchange with delayed data, with slow data, with data that's inaccurate, because you're going to get run over. If you're posting collateral, you're going to get liquidated, et cetera, et cetera. So we totally flipped the market data economy around and said, instead of going to a Bloomberg or Infinitive, let's set up a network that allows the institutions, who again don't see a single cent of market data revenue, why don't we get their data? And so we set up this network where we allowed the top institutions, Jump Trading, Virtu, Flow Traders, GRW, some of the exchanges like SIBO and IEX, MEMX and MIAX, big asset managers. We have several banks coming on. They're now publishing their data across all these asset classes directly to Pyth, where we aggregate together and we compute a Pyth price from that aggregation. It's derived price. And because of that, because we don't have any deals or relationships with like vendors or whatnot, there's no licensing involved. And so we're able to create an entirely new alternative data business that could help grow DeFi, because out of a single API, you now get multi-asset, multi-region data. And we've seen that come to fruition, where we're working with nearly 700 applications on across 110 blockchains. And we're able to let a lot of these developers and new businesses actually scale and build.
Pyth still making moves, guys, still growing, still producing, guys. So if you're sleeping on Pyth still, you're making a mistake. That's just my opinion. You're sleeping on a gem. Let's go back into the chat. Sam says, hoping for a real alt season. We've been waiting for almost 2 years now. Just glad I doubled my Jazz Beagle. There you go, man. Also, good morning, Rob. Good morning, brother. Marcus, Tom Lee saying 180K Bitcoin by the end of January. I'll take it. I'll take it. Another locals in the house after a good night. Scoop went to sleep, woke up green. There you go, man. When do you think to upload new exit prices in the Patreon like the past? Exit prices for what? Our list of gems? I'm going to make you watch the Patreon live from yesterday, because we discussed that in the Patreon live. It tells me you're not watching the content. So I'm going to make you watch it, man. I'm going to make you watch it for the answer to that question. Cold, Surrey, timber. What do we got? Carl, are those penguins on that picture behind him? Bullish on pudgy penguins. There you go. DH. Rob, I think DATs have not been the greatest thing for crypto. Your thoughts? DATs? Not yet, right? But I mean, sometimes patience is all you require, right? Let's have a look. Fear and greed, right smack dab in the middle in neutral, guys. 49 out of 100, almost 50. So a lot of positive sentiment coming back into the markets. Altcoin season index only at a 22 out of 100, so it's a long way to go. And we were overbought yesterday significantly. We're back down into the back down to neutral on the average crypto RSI, 51 out of 55. Very, very nice. Which means let's go more upside, baby. Let's go more upside. What else do we have? Yes, this is what I wanted to cover. Guys, we got 106 people watching. We have 54 likes. Let's get it up there, guys. Let's get to 100 likes. All right, so the MSCI's latest move, crypto reserve companies brace for impact. Let's talk about it. Since MicroStrategy embraced cryptocurrencies in 2020, a new corporate strategy emerged that capitalized on digital assets or financial growth. Michael Saylor, once skeptical, reaped remarkable success during 2021's cryptocurrency surge, inspiring others to adopt similar tactics. As multiple companies entered the fray, attention shifted towards the regulatory environment and the implications for these enterprises. Following MicroStrategy's lead, numerous firms prioritized various cryptocurrencies, including Ethereum, Binance Coin, Solana, and XRP. These companies leveraged their public market presence to benefit from from crypto reserves than their primary operations. Transitioning from proxy crypto ETFs, they attracted significant investment influx, propelling major stock sell-offs to expand reserves. By late 2021, MicroStrategy had established itself as a go-to surrogate Bitcoin ETF amid the absence of official spot approvals. This evolution drew criticism from financial bodies like MSCI, who argued these firms adopted less like traditional businesses and more as investment vehicles. Consequently, MSTR shares felt the pressure of looming delisting threats, largely impacted by unfavorable decisions against such corporate models. MSCI's recent reversal on delisting temporarily steadied MicroStrategy shares with a slight market uptick, yet market analysts like Dark Fost cautioned against misinterpretations. MSCI explained that current listings abide by standard criteria, making their removal unlikely. Although market cap surges won't reflect the index weightings, upcoming reviews may introduce stricter guidelines influencing companies deviating from conventional business activities. So basically they're saying it's different than normal, so we don't like it. While the recent reprieve provides breathing room, it signals potential complications ahead. MSCI's perspective of reserve entities as funds rather than businesses might prompt unique measures during subsequent evaluations. Even with this temporary halt, the decision does little to eliminate ongoing market trepidation. Anticipated legal shifts and regulatory structures could maintain bearish trends within the crypto market, spurring further sell-offs in upcoming weeks. Given the volatile outlook, companies may need to revisit their strategic alignments to navigate impending industry regulation changes. The evolving landscape demands proactive measures, yada, yada, yada. Trying to stop these companies from using crypto as a treasury reserve asset. Not cool, bro. Not cool. Let's get back into the chat. Crypto J505 in the house. What's going on, man? Passenger, you think Binance will remove Jasmine soon? Probably at the soonest would be April, at the soonest, right? They don't evaluate their monitoring zone until the first week of every quarter, so it would have to be this week that we're in right now, or the first week of April. Have no fear, I am here. My guy Ben in the house. What's happening, brother? Justin says, what's up with Nadix looking like doo-doo? Yeah, well, I mean, I don't even know what to tell you, man. When the whole market's doing well, including Nadix, and people ask about one specific project, saying, why is this one specific project that's following the entire market's trend? It doesn't make any sense. Paul, good to see you, brother. Good to see you. All right, let's keep it going. Let's get over to Squawk Box, see what's going down. We'll see a YOLO options craze in an unexpected industry this year. Interesting.
Lou Silverman, head of derivatives strategy at RBC Capital Markets, joins us now. I'm talking about you're going to go across the universe in terms of markets that you're watching right now. All right, it's January. We're setting up. What are options or derivatives telling us about the tail? What is the tail telling us about the dog?
So look, we just put out our 2026 volatility outlook, 4 main predictions, but the gist of it is that it's going to look similar to last year, but it's going to rhyme. And one of the key things we discuss is you've seen a lot of this exuberance in call options, the YOLO, FOMO, and the AI side. One of our predictions is that you're actually going to see this mechanism, but in an industry you wouldn't expect. So perhaps like healthcare. And a lot of that has to do with this retail leg of the stool we've talked about, where people are waiting for this leg of the stool to be taken out. I don't think that's what happens, Joe. I think you're actually just going to perhaps see a move on because there's so many other things that you can use to express optionality with the prediction markets, cryptocurrency. So it's possible that retail could just move to something shinier, but not necessarily something scarier.
And there's plenty of new things, new shiny things that you just mentioned. And you mentioned, I guess crypto is one, obviously prediction markets is another. Short-term options, they all go into this. So some interest comes away from traditional retail buying and just equities and goes into these things. So equities come down, but not for any horrific reason. Is that what you're saying?
No, I think, look, it's probably still going to be a relatively strong year for the market. I think a lot of people have been asking, if you take away the sustained retail buy the dip, does that scare the market? I think actually what happens is if you lose that support, again, it could be to something different like zero-day options, changing your tenor or changing how you express things. Just think about what occurred with Venezuela. You're actually seeing people play that in the prediction markets itself. 10 years ago, there was really only one venue, which was the option markets. And so you do see some sort of disintermediation, and what that has created, the one thing I think is really interesting to think about is there is this shadow hedging complex, which we talked about last time, which is this idea that there are people who are interested in hedging, but because you have these April 2nd situations where the whiplash is so high on the right tail back up, there's a lot of reluctance until we see downside momentum confirmation.
Why? You don't really usually dabble in fundamentals. These are not all exactly the same. YOLO, FOMO, and MOMO, but they're all kind of the same. So you only live once. You fear of missing out.
MOMO?
MOMO's momentum.
Momentum.
Why would you say it could move in the options craze away from AI to healthcare? So you're picking why healthcare? Are you seeing technical signs of that, or you think there's a reason for it?
So one thing we see that's an indicator is this idea of option skew, which simple definition is just the demand imbalance between put options and call options. Usually, and this has been true for 30 years, the put option demand is higher than the call option demand because most folks are long and they're trying to hedge.
Right.
And what happened post-COVID is this totally flipped on its head. We had to take the playbook from 30 years, throw it out the window. And a lot of that had to do with retail, which really prefers to buy call options. You're starting to see signs of that in kind of not boring industries, but industries that you typically wouldn't expect. So we've seen it in AI already. We saw it in your meme stocks. But we're starting to see it shift into other industries. The reason is people are looking for a show me for AI. They're saying, great, AI is wonderful. There's all this CapEx expenditure, but what is it going to help? Is it going to help make the healthcare industry more efficient, industrial? So when you're starting to see these show me ideas bubble up, to some degree, it is an extension of the AI story, but the technical indicators, I think, will start to map into industries that you haven't seen in the last few years.
So if you're not using puts because you're already long, then this is, and it's skewing the calls, then it's FOMO. Then you're not in, and you're trying to cover yourself by having calls. So is that bullish? So overall,
you know what I would say? I call it the reluctant rally, in the sense that if you're a portfolio manager on day one and you've been living through this market the last 3 years, you know how heavily concentrated the market is in certain things. And just because you have to participate, because you have to meet a certain benchmark return, does that mean you're bullish? I don't know, but it still means you have to participate. And we capture that.
Sounds like the opposite of what he's talking about.
But it doesn't mean that you're not in the market.
I'm in the market, but I'm afraid.
But I'm reluctantly in the market. And that's why I call it shadow hedging, meaning a lot of these folks actually do want to hedge. They do feel rather bearish, but they're afraid to, because what happened April 2nd?
Right.
You got that sharp sell-off, but you got that whipsaw back up. They spent most of that year chasing the right tail, not protecting their left tail. And so it's, again, the same mechanism of, every investor I have these macro roundtable dinners with, they tell me they're pretty bearish, and then I say, well, are you in the market? Absolutely, I have to be. And so I think this continues, and then you even see that chase more to industries that you wouldn't expect.
You know, you never catch your tail if you chase it. And
my cat does.
Yeah, my new German Shepherd
my cat can catch his tail.
He just saw his tail. He's 7 months old, and he just saw it. It's like, wow. It keeps,
pretty exciting.
So we're going to go on to something else here. So you think, okay, again,
kind of got lost.
Mostly technical. Taiwan and Greenland loom large in your mind at this point.
It does. And I will tell you, when the Venezuela news initially came out, when the Venezuela news initially came out, the first 3 pings I got were about Taiwan, about the Taiwan tail, because obviously this is essentially a precedent for other of these situations happening. I mean, and it's not like the PRC hasn't discussed it. It's not like Trump hasn't discussed Greenland. I will tell you, we go to these volatility conferences, and every year the Taiwan tail is thrown out as something that could possibly happen, but has never felt more real to clients.
Yeah, it feels like a fatter and fatter tail.
It's a much fatter tail this year. People are much more explicitly asking, how do I express this?
So you don't believe John Thune?
I mean, you know what I would say is there are so many things that have happened that you could use the word unprecedented in front of it, Andrew, that we've had to then
So you should raise these questions.
I think so. I mean, I think your Overton window of what is possible in this administration is just larger. And so when you think back to what other countries have said, if we go to these
I've been told I shouldn't ask these questions every day.
Well, I'm not saying
because of these questions somehow are inappropriate.
That's
because we every day listen to these things, and we've become so a nerd to it that I'm supposed to just
whether or not we ask it or not, I can tell you the market is asking it of us.
They are.
So it's
I heard about
clients,
that.
That's why we talk about it. I'm not telling you not to ask it. I'm just telling you that the worst case scenario probably isn't going to happen normally.
And that's always a matter of perspective, in the sense of it might be a worst case scenario for some and not others. And that's a market question in terms of.
Oh, it's a perception question too.
Of course.
I mean, there was a candlelight vigil about a 5-year anniversary yesterday of January 6th. And so once I look at that, and I think it looked silly. I think it was ridiculous. On the other side is like it looked like a pall was cast upon me.
And so, Joe, that's what makes a market.
That's what makes a debate, and that's what makes a morning TV show. And
I can tell you that the tails are fatter wherever you stand.
But you can't if they're fatter, you ought to be able to catch them because they're moving slower.
And the thing I would say is, what I thought was really interesting about the way the Venezuela situation worked is it went straight back to AI, in the sense that, think about what was first on clients' minds. They saw this kind of geopolitical event happen, obviously impacted energy, but what do they think of next?
Taiwan, and they worry about the chips.
Of the
chips,
happens, right? So all roads come back to AI. What I thought was so interesting about the calls I received is what's still on investors' minds, no matter what happens geopolitically, you go back to the chips.
Did we glean anything that the market's up
it's all back
points after the invasion of Venezuela?
I think geopolitically, this has always been difficult for markets to price, especially as we go more short.
But you know what I'm saying? Or tariffs, as I've lived it. Did the worst case scenario of tariffs and hair on fire moments for 2 months on tariffs. How did that play out for people that thought tariffs were
So volatility's remained quite muted on that, and there's been a lot of dispersion.
We're at new highs, and pointing out that that panicans usually don't make money in the markets. There's nothing wrong with it.
And if you look to April 2nd, even when you do have the panic, you again have that right tail back up to worry about.
You do, and that was a much bigger worry than the left tail on Liberation Day, was it not?
Yes, and one other thing I would say is when going back to what is the appropriate hedge, one of our other predictions is when you look at what has been used to hedge that's actually worked, it's typically been gold and not as much your VIX and S&P complex. That's another change that's happened because of the dispersion we've seen in the market.
Probably why we've seen gold climb so much. Absolutely. Okay, what else do we have? Let's go back and look at the Bitcoin chart again. We got some chat to get into here. Strawberry Dragon says, happy hump day, finally caught alive. Good to see you, Strawberry. It's been a minute. And Candyman, where have you been, my friend? We've missed your jokes. Hiking in your 50s is a great way to meet new people. Today, I met 2 paramedics, 3 nurses, a cardiologist, and nearly met Jesus. Nice. Well done, my friend. Well done. Glad Zebek released their updated tokenomics. Yes, we'll probably cover it in tonight's live stream, but more so we'll cover that tomorrow because they are doing a Spaces tomorrow, breaking it all down. So we'll probably cover that then. Hope Jasmine can have another huge run of this bull market. It will, in my opinion. So yeah, Bitcoin back up over 91.5 again. You love to see that. Candyman's been traveling. Well, I'm glad you found your way back to us, my friend. We have missed you, brother. All right, guys, listen, I got some running around to do. I will be back later tonight for a live. Make sure you're here for that. Patreon live at 6 p.m. Guys, if you are not over there, you're missing out on all the content. We're dropping some trades today as well in our trading group. Like I said, the Patreon live tonight, 6 p.m. Central. Be there for that and so much more, guys. Book your one-on-one coaching calls. Let's get your portfolio structured and pointed in the right direction. Let's figure out an exit plan, a profit-taking strategy for you, and so much more. The link is in the chat. It's in the pinned comments. It is in the description. Click like if you like this video. Click subscribe if you really liked it. I'll see you in the next one, guys. God bless.